So the last session was the leaders of two very important organizations talking about how Africa has organized itself to look after supportive trade and supportive finance. On this panel, we continue on with some of the same questions. And so we're going to be addressing a number of things, but more from the private sector perspective. So we're going to be looking at trade and investment, just like the last panel. How can Africa be more competitive in a global context? So let me start by introducing all of us. I'm Runa Alam. I'm co-founder and CEO of Development Partners International, or DPI, which is a Pan-African private equity fund, 15 years in existence. I've invested in Africa for 23 years, and we manage about $3 billion. Next to me is Uche Orji, Managing Director and CEO of Nigerian Sovereign Investment Authority. Next to him is Cheryl Bus, International CEO of Absa Group. And then we have Mr. Prakesh Hinduja, who's the chair of Hinduja Group of Europe. And right at the end, Gagan Gupta, founder and CEO of Arise 2IP. Is that right?
That's right.
Okay, great. So having made the introductions, we're going to break down today's discussion into three parts. We're going to talk first about a little bit about the macro to set the stage. Then we're going to talk about we're going to talk about trade, and we're going to end in the third part on talking about investments. So let's get started. So one of the things to consider is the following question. Why has Africa's post-pandemic recovery lagged behind other regions? What is Africa's macro position today, and what is it in relation to EM and the world? So this was a question given to us. I would say right at the start that perhaps this question isn't quite correct. If you look at over COVID, Africa actually was the second least hit region of the world. Asia was marginally growing at 1.5 to 2%. Africa was marginally shrinking at 1.2%. As you know, other parts of the world had 10%, 20%, even more than that contraction. So now, in the recovery phase, what you see is that Africa's recovering, rebounding less, but it went less down. And in fact, in 2023 and 24, Africa is meant to go back to be the second fastest growing region in the world. So in that context, I'd like to first start with Gagan to make a comment on what I just said and on the question.
Sure. So I think one key thing was that globally, so much liquidity was infused during COVID. So $10 trillion was infused. And as we printed, over 25% of the money in circulation was printed during COVID times. But that money never came to Africa. That was really in the developed world, the emerging markets. And when you look at even the saving side, so a lot of money was saved back by people. And you look at the stock market wealth created during that point of time, that was never created in Africa. That was really created outside of Africa, be it in stock market, be in the cryptocurrency space. So Africa never had that kind of liquidity that pushed the post-pandemic boom. And therefore, you don't see that kind of boom that you saw in some parts of the world.
Thank you. Cheryl, you have any thoughts?
Thanks, Runa. Yeah, I think I agree with you. Africa was working or operating off a lower base in terms of its contraction. But some of the lag effects that I think we have seen are Africa's had an extremely, one of the highest, sorry, let me get my highs and lows right. It actually had the lowest vaccination rate, and that actually stalled development coming through. And I think when we look at what took so long to open up, Uganda only fully opened up in February 2022. And so what were the impacts there? We saw an impact in the tourism sector. I think through COVID, Africa more than ever had to learn to be and develop its own independence. And it realized that that global support wasn't quite as there as perhaps the African continent had hoped. And that, with increasing debt burdens, didn't paint a picture of one that Africa was going to emerge as quickly as perhaps we would have hoped. I do think, however, and we're going to unpack them later, that there are naturally a lot of opportunities, investment and trade opportunities across various sectors that we're seeing emerging. But I think that lag effect, as you say, wasn't quite as great, but there certainly were extenuating circumstances that did contribute to it.
Thank you. Uche, anything to add?
Well, I think the 2 points made by both Cheryl and the earlier speaker were probably spot on, but I'll point out 3 things, right? The first is it's kind of hard to disaggregate post-pandemic growth with what's happening now with Russia, Ukraine, which I think has its major headwinds, with the impact on food inflation, with the impact on agriculture, and the impact on all sorts of things in Africa. That's the first thing. So I think those 2 events are almost tightly coupled. So I'm not going to add to the other points that were made. And of course, we don't have the liquidity to drive the sort of growth you've seen in the OECD countries, which I think is probably running over right now because that liquidity can't be sustained. But the bigger issue for Africa is, even if we went back before the pandemic and today, the real question is, are we growing fast enough to create enough jobs for our people? So the numbers might say we're growing faster than OECD. That doesn't really mean anything if we're not creating jobs, if we're not actually creating real growth for our people. So I think that issue needs to be addressed, and that's an issue that has been existing for a very long time. So taking a short period of time, snapshot, to ask the question doesn't really address the fundamental issue that we face across Africa. And I think the third thing that we should be addressing is more how do we then start to get the real growth levels that we need to start to address the real needs that we have in Africa. So I like the question, but the question doesn't address the real issue that we need to be talking about.
Yeah. So in summary, what we're really saying is that COVID did have an impact. Africa was, even with undercounting, apparently the second lowest infected and death rates after Oceania. However, because closing of borders, that created economic issues, and there wasn't the liquidity there. And also we're saying that there will be growth, but we really have to focus on real growth and how to get there. So before we go on then to the other questions, let me ask a follow-up question, which is, if you had a wish as to what you would change as private sector players, and Sovereign Fund does act as an investor, in terms of creating that macro growth, what would you change? Gagan, do you have a thought on that? And then we'll go to everyone else.
So I think if you look at macro factors currently, they're actually a big tailwind for Africa. So I think if you look at, I think probably 5 key macro factors. So one is clearly what is happening on the world changing from unipolar to multipolar, which is really pushing supply chains to be disaggregated. So, whole push was, earlier boardroom discussion was, what is the Southeast Asia strategy? Do you have manufacturing in Southeast Asia or not? Today the discussion is, what is your strategy outside of Southeast Asia? The whole discussion around, nearshoring to onshoring, that's big change happening. So I think one is clearly realignment of supply chains from purely cost effective to most reliable. The second change, big thing that is happening is everything to do with green push. So I think as consumers, we are changing our behaviors. We want things which are good for the planet. We want things which are good for us, which means we are wanting things which are more traceable, more verifiable. And if you just link back to Africa from an African perspective, that means today all this circuitous route that we take, Africa produces 65% of world cashew. It ships it back to Vietnam, and Europe and US consume 60% of world cashew. So we do the circuitous route, which essentially is nothing but adding to climate issues. So that's going to work in advantage of Africa. I think third thing that is big push is really policy framework. So I think if you look back 5 years back, and today the number of governments which are coming with policy framework for industrialization is massive, we have never seen that before. Yeah. I think that's also significantly adding to this advantage. And fourth thing, we're all talking about, resource. I think Africa sits on resource. And there's the golden chance to ensure they change from being a global commodity supplier to global product supplier. So I think all this for me really is macro factors which are pushing Africa's growth and can actually be to its advantage. But one thing we have to be cautious, we cannot paint Africa as one. Yeah. There'll be geographies which will be successful and there's geographies which will not be successful.
Absolutely. Thank you so much. Prakash, do you want to comment on, because you have manufacturing operations throughout Africa. If you had to change one thing from a macro perspective, what would it be to help Africa grow?
Well, I would say that Africa is one of the biggest continent, in the world, and we have a huge opportunities over there. And I would suggest that the PPP, as Professor Benedict Orama mentioned about this, that private-public partnership should be the great opening key for all the world economies. When World Bank had created a big conference, they had a PPP plan, private-public partnership. Now, these are the two key roles we have to play in whether it's a World Bank, whether it's a African Development Bank, whether it is Africa Exim Bank. All of them has to play on each project in going into PPP concept. Like we did one PPP concept in Nigeria, which was financed by Afro Exim Bank, was a big success story, but it was not replicated to other part of the world. So I was talking to so many of the World Bank's meetings that when one project, one model is successful, they created a conference on transformation of transportation, which was done on many occasions, but there was nobody there to implement these programs. So I was talking with several dealers from Nigeria, like as we are sitting with the Nigerian personality of the sovereign, part of yourself. I did mention to them that the companies like Abuja, they had an environmental issue. The traffic used to take 4 hours to go from Lamata to Lagos. Now it's done in a very short way. So Abuja, the minister said he wants to do it same thing.
Okay, so really, Prakesh,
they had
it's
financial
PPP.
issues. They had financial issues to do it. So I said, these financial issues can be solved by PPP, private-public partnership, by the World Bank, other things or the other. So bottom line, agriculture also is the same thing. In every sector, we should try to use PPP concept where we can get the success. That is my message.
Thank you very much. Supply chains and PPP. So we're already into our second sector of trade. So let's continue with that. One of the questions we've been asked to take up is the Africa Continental Free Trade Agreement, which was already discussed in the previous panel, of course, with someone who knows the most about it, possibly. But I'm curious about what you all think about that. And what I'd like to do is start with Cheryl. So what will make the agreement, will the agreement make Africa more globally competitive from your perspective?
Yeah, so I think it's certainly an exciting agreement, and we've heard about it quite substantially today. But I think that what's also fundamental to the success of that is around how we integrate Africa better into global markets and into global trade. Africa only participates to the tune of 3%. In global trade. So how does Africa become a global trade player? Likewise, intra-Africa trade, as we've heard earlier, is also quite insubstantial. So I think that a significant development around that, and Gagan, you referred to us, was the onshoring and looking at developing manufacturing. I think that if we look at developing manufacturing across Africa, that will look to assist in intra-Africa trade. It'll also look to reduce Africa's reliance on commodities and the export of commodities, and hopefully start to develop that growth. And as we heard earlier, start to look to the 100 million in terms of the investment required and the development of Africa to come out of poverty.
Thank you. Uche, would you care to comment on that question?
Sure. I think, first of all, without a doubt, the impact of the Continental Free Trade Agreement will amplify individual growth for each of the countries. But there are a few things we need to get right first. The first thing we need to get right is transportation and logistics. I went for a conference recently in Morocco, and the Angolan delegation had to fly to Portugal to come to Morocco, right? So we need to find a way to make that work more easily. And African countries need to think a little bit more in an integrated fashion. We have, for air travel, we have a world-class company in Ethiopian Airlines, right? Why can't Ethiopian Airlines replicate itself across other African countries? If we really want to integrate growth across Africa, that will make travel a little bit easier. Try going from Ivory Coast to Nigeria. Flights about odd hours. So first, we need to get it right. Secondly, we need to build a lot of intra-Africa transport network routes. Intra-Africa trade is what, 17%? against intra-European trade of 64%.
Yeah.
So you cannot have trade if you don't have the right transportation and logistics infrastructure. That's number one. Number two, obviously, there's a lot that's going on that is ignoring the fact that Africa needs to industrialize. Somebody mentioned that a little bit earlier about the realignment of supply chains, right? It's a big opportunity. What we have seen with COVID is that there's a limit to global trade, right? So everyone needs to kind of find a way. So Africa has an opportunity there. But being able to be a supply chain diversifier for Europe is one thing, but actually manufacturing for intra-Africa consumption is an even bigger opportunity. But you have to get some of these logistics and infrastructure and road transportation and air travel to work a little bit easier. Once we do that, and if it's the one big thing that with Afrexim Bank, AFDB, and every other international DFI within Africa, we decide to focus and solve, that would be one major thing that I think starts to improve trade. So we can talk about all we want, do as much fintech as we want. At the end of the day, trade is about goods that have to move from one place to the other.
Mm-hmm. Did you want to say something?
Absolutely. And to add to that, I guess the one thing that's critical is obviously the power sector and the development of power across Africa. And this is where you enter the debate around the impacts of climate change in Africa versus the lack of power supply and the accessibility of the African continent to power. And so I think that, all the various ecosystems do interlink with each other, but with power being a major driver, and the development of the renewable sector as well. But how do you do that in a balanced manner such that it addresses the other concerns that we're seeing across the world and into Africa today?
Okay, so you have all identified things that are problematic that you want changed in Africa. Let me turn it all the way around and say, what do you think then the solution is? Because you guys are private sector investors. No matter what the structure is, you have to make a profit. You have to make it work. You have to deliver goods, banking services to your customers. So supply chain, PPP, or the fact that there isn't enough of it, power, infrastructure, both in transport is what you're talking about.
Right.
And let's keep this really short. For those people who are actually operators, I want to know why, despite that, you're successful operating in Africa. And then very quickly also, so I'm going to hold you to a minute each to each part. What needs to be fixed? Okay. We can start with Gagan because it looks like you're ready to go.
So I'll talk the practical experience.
Yeah.
It's good to have Africa Free Continental Trade Agreement, but we have nothing to trade. You can't be selling raw products to each other. You need to have goods to trade. And I think problems you listed like power, financial institution, the question is really chicken and egg story. What comes before? And this is exactly what we do. And I'll give you a live example. So Gabon used to export round logs, and they've been doing for the last 100 years. When we went to say that Gabon will now export furniture, everybody is saying where the power will come from, where the industry will come from. You need somebody who can put this all together in one single place using a public-private partnership. So we created a PPP with the government, and similar PPP we have in Togo, Benin, Côte d'Ivoire, Rwanda, and we build the entire ecosystem where you bring the industrial players. So first you solve for the PPP in terms of ensuring that there's somebody who's going to execute it. And since somebody is going to execute it, people get comfortable that yes, there'll be a power offtake. So somebody can come and put the power offtake. Since power offtake is there, industry gets comfortable that yes, we can come and set it up. Then you need to bring banks alongside with you to ensure that this will get financed in terms of their working capital needs. Then you also need to solve for policy framework. So you need to work with the government that they have the right policy framework, what I call a soft infrastructure. So you can attract industry. So I think it's a combination of 5-6 things. First, you need to have a private operator with the government putting the right policy framework. You need to have right infrastructure so that people can come and operate. Thirdly, you need to be very clear what are you going to do. Because a lot of times countries want to industrialize everything. And that is where the power of African Free Continental Trade Agreement comes in place. Because today if you go and ask every country wants to have vehicle manufacturing. Every country wants to have garment manufacturing. But what African Free Continental Trade Agreement will allow to build pockets of excellence. So if you go to China, you have a village which just focuses on artificial hair. You go a village just specializes in socks. And you have to think of Africa something like that you'll have, for example, Benin, largest producer of cotton, producing everything to do with cotton, but probably Togo producing all the accessories for there. And then you go to, say, Chad, which is a meat processing country with 126 million livestock. is feeding entire Central Africa and Nigeria for meat processing, rather than every country trying to do it. So I think countries need to be very specific.
Essentially, yeah. Okay. Thank you. So what you said is, despite everything that was said, you actually are able to put together things in order to make your business grow using existing things like PPP and other things. But you also think that Africa could grow by specializing, by the government thinking about what is the comparative advantage. So thank you for that. So Prakesh, you actually provided the answers in your answer, the answer to this.
But I can add something more for you.
Why don't you add, but very short.
You see, let me tell you, Hinduja group of company has 200,000 people working worldwide. We are a global family. We have experienced different challenges in the African world, which we have been successfully able to accomplish. Mm-hmm. For example, when we entered into Ivory Coast, Côte d'Ivoire, that was the biggest challenge we had. And we had a biggest contract signed for the transportation, and we were successfully operating. Then we went to Senegal. Senegal, they had a plant which was not running 50%. Only we assembled the vehicles over there. And again, it was successfully operated over there. Same thing we did with Kenya. We did with, countries like Angola. We went into South Africa. So each country has a different challenges, but our ideas, we entrepreneurs, have innovative ideas. And with these innovative ideas, we were able to find solutions. We're discussing with institutions like IFC and World Bank, like African Development Bank, like African Exim Bank of India, to bring all the institutions together. And when we brought them together and come to a concept of solving the problems of each country, we were able to get into it. Now we have several countries which we have never done business. We are entering now with Cameroon. We are going into Angola. We are going into, Guinea. We are going into Gabon. We are entering into the different African part of the world where we are using the same programs and same ideas and same concepts. So that is why we welcome the African world. We have a commitment with Africa, and we are hoping that the new development which it takes, not only in the transportation, we are entering into IT business, we are entering into renewable energy, we are entering into the program of digitalization, we are entering into the areas of healthcare, we are entering into the area of financing and trade financing in different programs, so that the entrepreneurs can benefit from this, and the young youth, which is today getting unemployment, jobs can be created for them, and the new generations which is coming up from the African world can be the future of Africa. And plus, in the mining side, mining is the biggest fortune which Africa has, and we are trying to enter into that sector also, to use our transportation to help them. Like when I met the minister of recently at the World Trade Organization in Geneva, I met the trade ministers over there, and two of them were so much interested that in Congo, people are suffering for transportation. There is nobody there to help them. So I told them, we will come and help you. The minister was very happy to see that we can able to work on it.
So Prakesh, I'm going to summarize what you said, because
Yes.
we are going to miss our time to talk to the investment side. It sounds like as an operator, you can make it work by going to different places. And we actually thank you for all the places that you're operating. 1 minute each, literally, I'm going to hold you to it. Uche and Cheryl. Cheryl first on
Thank
power,
you.
and then Uche, and then we'll go through the investment discussion.
Sure. Yeah, I agree with the sentiments expressed, and the fact that we shouldn't, it's 54, 55 countries, and each of them shouldn't be looking to replicate. I think some of the thematics, though, that we're missing, and perhaps we haven't discussed as yet, is human capital and development. The fact that there is extreme poverty in the continent, the fact that agriculture is a big resource. So we look at the big infrastructural projects, which, and again, it's like that chicken and egg situation, but I think we also have to look at the fundamentals, which if you do look to developing locally and accessing the supply chains, how do you take what is hopefully a growing middle class and develop them and bring with that capacity for further growth?
So just because we're going to run out of time, I'm going to switch on you, Uche. Sure. Okay? I'm going to now go to part 2, which is the actually part 3, which is the final part on the investment side. And I'm going to ask you, what are the problems with Africa's financial services industry and what reforms are needed? What reforms in particular, because we hear about transparency, efficiency, but also liquidity. So as you know, I'm in this sector and I find it works if you know what you're doing. But what are your thoughts?
No, I agree with you. It does work. For all the issues that we've outlined, there have also been a lot of success stories and things that can work and work very well. At the NSIA, and I'm going to speak to specific examples, we took a few decisions. The first was to treat the financial markets as a piece of infrastructure. So we had a segment called financial markets infrastructure, so things that we thought were missing. Why are these markets called emerging markets? That's because they have voids in their financial markets infrastructure makeup. Mm-hmm. So quite a few things needed to be done. I see someone from Infraco Africa in the room, and NSIA and Page and Infraco Africa many years ago decided to create an infrastructure guarantee scheme. And that helped companies to access the bond market, helped to get pension funds to invest in infrastructure. I'd like to see something like that on a wider scale, bigger scale across Africa, because suddenly it made it easier for us to mobilize pools of capital to make it work. There was an issue with efficient movement of capital to small and medium enterprises. We also co-developed the Development Bank of Nigeria. So there are about six or seven different financial market entities that we've either sponsored or co-developed or invested in. We need to fill all of these voids to make for an efficient movement of capital. Across the continent, we should be able to invest easily. Pension funds across each country used to invest easily. Now, if you want to solve a specialization, you cannot really do that unless capital can move very easily from one place to the other. We've seen some move from South Africa to Nigeria, and we at the NSIA, we've backed almost every single fund that has invested, not just in Nigeria, but also in Africa. But we're small. But we need to make sure that that whole capital formation process works very, very well. The third thing is, I think, back to the concept of PPPs that Prakesh from Hinduja talked about. Mm-hmm. Governments need to think differently, and we've had an example in Nigeria, for example. There were three major road projects that the government couldn't execute for the last 40 years. And it was transferred to an organization. We mobilized third-party capital, we invested ourselves, and we've been able to complete 640 kilometers of toll roads and bridge in the last 3 years, and which in Nigeria, by the way, will have taken it for that 20 years to complete. So there's another way government needs to think a little bit different. That's an advice we're going to give to everybody else who works in government, and I do work in government. And so we're able to actually show that these things can work. But the point here is that sovereign capital needs to be seen differently. So not only do we need to back venture capital, private equity, create other financial markets infrastructure, sovereign capital needs to be seen as catalytic capital, seen as risk capital that actually plays a more active role than just allocating capital. And I think it's nice to see African countries create this, because I actually see them as a powerful instrument for change in the way we view government's ability to invest in itself. And so we've also helped, we've kind of tried to show what we do to as many other African countries as possible. And I have big hopes that I think right now about 11 sovereign wealth funds in Africa, maybe more, and some are still coming up. This will be a very powerful instrument to mobilize capital across the continent. Yeah. 1.2 billion people, we may not be very rich, but that is actually a significant pool of capital that can be pulled together. Mm-hmm. The difficulty with Africa is that sometimes we leave the capital inside Africa to look for capital outside of Africa. Mm-hmm. We have to find a way to mobilize what we have. 200 million people in Nigeria, come together, we want to build a bridge that costs $700 million. Come on. I think we can actually do that, but we'll leave that and start looking for debt. And that's my last point. The use of debt needs to change fundamentally. It's expensive debt that we currently go for, and I think this is a conversation that needs to be bigger and across. I've just come from a conference yesterday where we're having these conversations. And I said, look, it's easy for you to write a $40 billion check to Ukraine to fight a war. But when we say, listen, let's create a vehicle that allows OECD, EU to invest in Africa, it becomes a little bit difficult conversation. We need to have that conversation, because the truth is the level of capital we need now needs to be significant, and the world needs to be able to be mobilized together to create that level of capital. So I think there's a lot that can be done. We've shown examples, but I think also we now need to elevate the game in my own ways to make sure that this kind of works across the country.
So let me follow up. You talked about that Africa has the capital right there within Africa, but there are gaps. maybe the financial markets don't have enough liquidity, or they can't take big company financing. Maybe the governments don't allow pension funds to yet invest in different asset classes.
Right.
Maybe
Across borders.
borders and all those things. Maybe there is more willingness, because returns have to be there, for capital, whether they're in insurance companies or in funds, to invest abroad. Seems safer. When your own region should be safer, right? So, so I'd like to just, again, I'll go to Cheryl next, but I'll come back to you also, Uche. Some of those questions about mobilizing capital internally and making the financial markets work. You're with Absa, which is a South African bank across Africa also. Why don't these things happen?
Yeah, thanks, Runa. We like to see ourselves, call ourselves a Pan-African bank, although our head office is is South Africa.
Good.
I think to some of the points mentioned, there are a number of challenges, and I think that the realization that that everyone has different objectives that they're trying to fulfill, and so how do we come together such that each of the different institutions can meet their varying objectives? So commercial banks have different objectives to a multilateral or to a development finance bank. And I think the realization that not one institution, be it public sector or private sector, be it government policy, commercial banks, not one can do it on their own. And so it is that collaboration between all the varying institutions with their differing objectives that hopefully when it can all get pulled together, we can actually see some success start to come through. I think when we look at Absa, we've looked very closely at what needs to be done to develop local capital markets. And this would also protect against external volatilities that we see. So what is the depth of the market? How easy is it to convert your risk? How easy is it to develop liquidity or your FX? And I think that if we do have deeper capital markets within countries, that we'll be able to see some resilience being able to be built.
Okay, thank you. I'm actually going to come back to you, Uche, on the same question, but a little bit about so you've made suggestions. They're mostly for policy. Sure. They're mostly for governments and other, state institutions. How do the private sector operate still within, this maybe slightly, the markets that still have development to happen? There are gaps in there. How do they operate in that? And I'm going to come next to you, Gagan, to answer the same question. Sure. And what would you like to see the private sector do to help fix all of this? We have requests for government. We have requests for institutions that are governmental, like your own. But what can the private sector do, both to operate in it and also to help develop these financial institutions?
Sure. I think there are probably three things, and in no particular order. I think the first that I will probably speak to is we've seen private sector sponsored entities do extremely well. It's got to be in places where the domestic market is big, margins are big, it's fast growing, and it has competitive advantages in those countries. We've seen companies invest in Nigerian gas-based industry, for example, and the exits have been at significantly high multiples in tech, in telecoms. So I think private entities have to look at the gaps that exist in those countries. And I know that there's been all sorts of theories about whether it's import substitution or export driven. There are policies that, of course, have helped, but private companies need to be able to, the ones we have seen succeed, having companies that have taken advantage of the competitive advantage of each of those countries, if it's Nigeria gas-based or telecoms or where you have huge populations. And I think we need to do more of those. The second thing is private companies need to think big now. The era of small, medium enterprises are still there, and it's very, very important that we continue to build those. But I also think that there's a lot that can be done with people going to raise big capital to do big business, to do big deals, right? And we've tried to encourage people in Nigeria and say, listen, $100 million to do a small gas processing plant. Maybe you should go raise $1 billion and build something bigger. And I think this is what we need to do if we need to break or what Clayton Christensen keeps talking about, the prosperity paradox. We need to build big things. So I expect to see more of that. The third thing is, and I think that private companies should not be afraid to upon raising that big capital to actually take on the burden of building some of the infrastructure that they will need. I know it sounds crazy to say that, but power. I've seen, okay, Dangote might be an extreme example, but it's had to build a lot more. But there are other companies that we have seen do stuff like that in Nigeria. There's a place in Edo State where a lot of Chinese companies have come together as a cluster. Mm-hmm. That's another thing private companies can do as a cluster. They've done the power, they've done the gas, they've done the roads, and every one of them benefits. So I think private businesses coming into Africa need to be able to operate in a cluster, in an industrial park of some sort. But the opportunities are there. And I think we've seen them, the investments we have made, we've seen actually huge successes. And I think there's an opportunity there.
Thank you so much. Gagan, you're a operator, a manager of a business. What do you think about the financial systems? Do they help you, or do you have to do what Uche said, you have to deal with it yourself, which ultimately everyone in the private sector has to do that. That's our job. But what are your thoughts?
So I think definitely I feel African institutions are much more understanding, much more helpful because they understand Africa better. So people like Afri-Exim Bank, Africa Finance Corporation, they have much more understand, because a lot of times most of private sector in Africa is trying to compete for capital outside of Africa. But that capital is fungible. So a person sitting in Europe might be wanting to deploy in London, and he will compare the risk premium there. So I think people have to more focus on the African capital and not necessarily capital outside of Africa. Okay. The second thing is, how many countries actually do road shows within Africa? So Ivory Coast wants to attract investors. It'll be doing road shows in UK, in France, in India, but actually do road shows in Nigeria, where there's so much pool of capital sitting. So I think a lot needs to be done on capital formation locally. And when we build our industrial parks, which is like clusters, we try and get more and more entrepreneurs from locally. And our experience has been they decide much faster and they are much more capital efficient. So I think one is really focusing on local capital within Africa. Secondly, promoting more and more local capital formation. None of the countries have developed with outside capital. Most of the countries and the continents are developed from capital within. And I think Africa needs to start thinking more and more on that lines.
Sure. So let's go to another question. And Prakesh, I'm going to come to you. Over the last 23 years I've been investing, this question has come up all the time. And I'm wondering, as a large company doing large projects in Africa, you had to make a decision to come into Africa, first of all, from India and other places. So let me ask you the question, are global investors correctly assessing the risk profile in Africa? And you can talk about why you're in Africa.
Are the global investors assessing the risk profile of Africa correctly?
And how did you decide Africa? Why not some other part of the world?
You see, because Africa, we see a lot of opportunities.
Yeah.
They have a lot of problems there. Like I give you example, Madame Al-Fayoumi, who's sitting over here. She is the wife of the ambassador of Al-Fayoumi from Nigeria. She comes up with the Fin magazine. She gave me a Life Achievement Award when I was in Dubai through her, analysis, what she did. Now, I said that let's take one state, Abuja. Now, Abuja is the capital of Nigeria. Mm-hmm. Everybody knows about this. When I met with them and I sent my delegation with them, I told them, look, here is the project we have done in Lamata in Lagos. Everybody is benefiting from the environment, benefiting from the traffic, which has gone down completely. Why you government are not helping Abuja to do the same program of the BRT over there? Look, the government issues, how they go on. I said, you want a guarantee? I can get a mega guarantee from Washington. Like a doctor, I try to find a solution for each of them into the different program so that project should take off.
Prakash, I get that.
But nothing happened.
But why come into Africa at all?
Huh?
Why come into Africa at all? Why do you have all these?
Because I see that we have been successfully.
So you have, okay.
Exactly, successfully accomplish certain projects in Nigeria. And that is why people from Africa have confidence and trust on our family. That is why the success breeds success. Okay. If the success would have not been in African countries, I would have not gone to other African countries.
So one can be successful despite all the things that we're saying,
exactly.
Which is, by the way, my experience. So,
I love to go into the African continent
Yeah.
to help the people who are suffering,
Yeah.
people who have problems.
but also from a commercial reason. Yes, we all want to do our bit on the impact side, the ESG side, and really just helping. But one can be commercially successful.
And moreover, I have a technology.
Yeah.
We have got a technology now, how to use that technology in different African countries. Like I'll tell you, when we started in Ivory Coast, the Prime Minister was from the IMF. And I met him first time in Delhi. And when he said, look, we need 50,000 buses, very badly they require. I said, okay. He says, come in my room. We had a 45 minutes discussion with him. And I accomplished the requirement of his country.
Absolutely.
And we are growing there in a big way because he had confidence built on us that what we can do for them.
Absolutely.
So
And
that
that's
is how,
a good
that
example.
is why the news goes to different African part of the world, every continent, and they want the family who has done so much good for the other countries. That's why I want to continue that.
Okay.
And I want to share with you, Your Excellency, if you want to know how we are doing it, Bernard Orama, said, I was the first one to do that project with us in La Mata. He was the first one to put his foot over there. And he said, I want to happy to do with other counties also if they want to come.
Okay. I want to now go to the last topic because we're running out of time. And can someone let me know how much time we have? 0. Okay, we should finish up. There we go.